Hi, this is Drew with Daniels Ag Services with your post-WASDE report, Wilkins Ag Wire. Markets finished up mixed, with corn and wheat finishing the day lower while beans finished up higher on the day. So why did that happen? Let's take a look at the actual numbers from the WASDE report here. Grab our handy whiteboard. All right, so this should be pretty self-explanatory to you here, but what we're going to go over is this is the estimates, which we went over earlier in the Wilkins Ag Wire today, and this is what we actually got today. So as you can see, for corn, we came in well below what we were expected to get today. We were expected to come in around 1.4 billion bushels. We came in at 1.331. As far as beans go, we came in below as well. We were expected to come in around 139 million bushels. We actually came in at 135. And then wheat, trade pretty much had it pegged right on at 580 million bushels was what the trade was expecting, came in at 583. So the main thing we want to take away here from the U.S. ending stocks is we were lower than expected on corn, and we were lower than expected on beans as well. And you can see beans is extremely tight. We're talking in billions of bushels for corn. We're talking in hundreds of millions for bean, which sounds like a lot, but it's really not. We're really tight stocks to usage ratio on the bean market. So 4 million might not seem like a whole lot, but it actually is for this market as tight as it is. Global ending stocks, not a whole lot of surprise there on the corn market. Came in pretty much right as expected, a little lower. Came in a little above expectations. I was looking at the wrong line there, confused myself. So we were expecting 157.72, and we actually got 158 today. Beans, lower again on the global ending stocks. So like the U.S. ending stocks, global ending stocks were lower, came in at 69.42 million metric tons. Trade was expecting 70.05. So again, lower on beans, and then wheat, we were much higher, around 3 million metric tons higher on wheat. So based on those numbers that you see there, it's not hard to figure out why beans traded higher. U.S. ending stocks incredibly tight right now. The USDA went ahead and raised the export demand. Expecting some cancellations. You hear cancellation. They're not happening. So the USDA's made an adjustment, and they raised exports, I believe, by 50 million bushels, but they also increased imports by 30 million bushels to help offset that. So they're expecting us to import some more corn. And we could see that raised up even more as we move forward here, as stocks are incredibly tight right now. I doubt we'll see the USDA go below the 135, 125 million bushel area. As far as U.S. ending stocks, we'll have to see how that plays out. But that's where we stand as far as soybeans go. Corn, there's some bullish factors to take away from this report. The fact of the matter is, though, there's just a ton of corn out there. Definitely the numbers were bullish based on what the trade was expecting. But sometimes they'll see these numbers and realize, while yes, we were off a little bit on our expectations, that's still a lot of corn. We're still around 10% on our stocks to usage ratio. There might not be the need to trade up to 525, 530 in those ranges, and a pullback might be needed. So that's probably what we saw in the corn market. And then as far as wheat goes, better than expected crop condition ratings coming out yesterday from the WASDE report, as well as some bearish world ending stock numbers helped pressure the wheat market. So moving forward, we've got this in the rear view. It's really going to go to weather. U.S. weather is going to be huge with planting season coming up. We get any delays in the corn market, that could spur corn and pressure beans, because the later we go into the year, the less chance you have to plant corn, and becomes more likely that planting soybeans could be an option for you. So the focus turns to U.S. weather. We'll be talking about U.S. weather now as opposed to South American weather. So it'll probably make a lot more sense on where these areas are for most of you that are watching, unless you're down in South America. But that's where our focus will turn moving forward, is U.S. weather, as we try and get seed into the ground. So that's all we've got for today. We'll see you tomorrow.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.